The real kind of first iconic text, which is a recognizable manual to how to act on the stock exchange, is Thomas Mortimer's 1761 book, Every Man His Own Broker. And I mean, there are interesting kind of assumptions going on in that title, which we can look at. But he's someone who was quite well born, a gentleman, and kind of he found his way into the early stock market. So this is before we have a stock exchange as such, but stock trading happened in the alleyways around all the coffee shops in what's now the City of London. So Exchange Alley was the big location where people would be trading shares, nip into the coffee shops. That's where all the brokers and the jobbers would hang out. So there's not one actual stock exchange, but the trading took place there. So Mortimer was a guy who ended up there basically to get rich. I've heard about the stock market. I've read about it in newspapers. This is where I'm going to go. I'm going to make my fortune. He lost a fortune instead and blamed all the intermediaries, blamed the stockbrokers, the stock jobbers, said, I've been defrauded. I've been fleeced. I'm going to write a book to help other people make money rather than lose money through being kind of defrauded, essentially. So his book is the first kind of how-to manual, which is giving a lot of advice about literally how to behave in Exchange Alley and in the coffee shops, how to buy and sell shares. And his big message was basically cut out the middleman. It's like the brokers and the jobbers aren't to be trusted. You've got to do it yourself. And if you go to the coffee shops, you can find buyers, you can find sellers, you can transact all your business yourself. And he actually sets himself up as an expert who will literally kind of hold your hand. You buy his book, and if that's not enough, you can go and
He'll be a middleman for you.
This is the first of the many contradictions that we find.
I saw that through your work. It's beautiful. Another contradiction, his title, Every Man His Own Broker, as long as that man isn't black, Jewish, or a female. Because he was anti-Semitic, racist, and didn't like women very much either.
So this is a characteristic of a lot of this literature, and that goes on a lot later than you would think. Because you might think, 18th century, this is to be expected, but it kind of remains there, and it is still a thing. But it was so revealing that already by this point, the ledgers show that thousands of women were investing in government bonds. Women were a presence in this very early stock market. But insofar as he talks about women at all, he's basically saying, surely you've got a male relative, brother, a father, someone who can do this for you. He does not trust women to go into the coffee houses themselves. So his guide is kind of entrenching all these assumptions. And there's this very strong sort of strand of anti-Semitism that runs through it, because a lot of the early brokers and jobbers, a definite minority, but are Jewish. And so there's all these anti-Semitic ideas.
Because he's lost money at their hands, he sees it as, and blames them.
And that persists as well.
Fear persists, right? Even in modern times, they sell under a guise of, this is very complicated, it's very scary, and if you do it wrong, it will destroy your life, kind of thing. It's always got that message, it seems, from your research.
It's absolutely, that's all there in this guide by Thomas Mortimer, that, he has these very colourful passages. This one of the fascinating things about this text, when you read it, it kind of alternates between fairly dry and descriptive kind of details of, this is how you go about buying and selling a share, because you're cutting out the middleman, so you need to know the technicalities of, the paperwork that's involved. But then he'll just veer off into this flowery description of, that's influenced by almost sort of apocalyptic writing of kind of bemoaning the evils. The stock exchange is a hell, the people there are devils, and it's this kind of very lurid picture that is meant to kind of make you think, oh wow, this is a scary place.
I need an expert.
So that's such a trend running through this literature, kind of build up excitement and interest, but also a bit of fear and a bit of apprehension. Therefore, you need the expert.
Yeah, I did. And it was interesting to see how a lot of these experts, you call them outsiders. So the insiders within the professions, the people who were, maybe this was later on once the stock market became more established, but the people with the actual knowledge rarely shared that information because they wanted to, maybe there was conflict there or they didn't want to. And what you actually get is unprofessional outsiders that were the ones writing the literature.
I think there's a big element of that, the stock exchange. Well, the first time there's a building with stock exchange written over the door, that's 1773, and then it becomes a kind of members-only club at the turn of the century, so 1801, 1802. And from that point, it becomes this kind of mysterious place. If you're an outsider, you literally can't enter the building. So there's all this mystique about the stock exchange. But at the same time, the actual members of the stock exchange, they're kind of quite affluent, quite well-to-do. They're not that interested in small investors. So
certainly not helping them.
Yeah, because they're making money from the commission, and they're not going to make much money from someone who's got a few pounds to invest in the stock market. So that's where you get this outside class of stockbroker who in the 19th century, there's no rules against them advertising. So if you open a 19th century newspaper, you're going to see their ads, quite sensationalist ads, the whole get rich quick, invest with me, you will make money. And they're the ones who are leading the way in kind of popularizing financial advice in the generations after Thomas Mortimer. So it's the outsiders who've got a vested interest in building the market, broadening the shareholder base. The insiders are quite happy keeping the market kind of small and manageable. The outside stockbrokers are very happy to bring in new people. So they're the kind of democratizers of the market in the 19th century.
I hope people can see the parallel between modern day finance, where people who are regulated and authorized, say, by the FCA, they won't talk about finance because there's just too much risk there, not much reward. Whereas YouTube and things like this is where most people are seeking out their financial education, and they tend to be unregulated outsiders that are commenting on it's the exact same thing.
Exactly.
It's kind of mad how these things just keep repeating themselves.
That was a clip from James Taylor. This guy read 300 years of finance history, so you don't have to. Check out the full episode right here.